Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings and hopefully not fall asleep doing it. Today, we're diving into Global Industrial Company's latest 10K report. Now I know what you're thinking, industrial supplies, how exciting can that be? Well, let's just say their internal controls might be more exciting than their product catalog. This report is packed with what we call forward-looking statements. And as you can imagine, that means it's important to understand the disclaimer. The company is taking everything in context of a future that may not exist. So who is Global Industrial? The company is a distributor of industrial equipment and supplies in North America. They sell through e-commerce websites and relationship marketers. They've been around in some form since 1949, so they know the MRO or maintenance, repair, and operation industry. A big move for them was acquiring Indoff LLC in May of last year. This helps them expand further in the MRO market. It's all part of their strategy to give customers a better experience. Their motto is "We can supply that," which pretty much sums up their expansive product line, and a lot of that comes from their own brands. Their sales team is built from a wide range of broad-based and specialized account managers. They focus on public sector, education, and other municipal customers. The goal, to get customers buying more and more often. A big focus for Global Industrial is customer satisfaction. It has chat bots and live associates. Their team is continuously solving customer problems. Employee safety is a big priority. They have teams focused on safety training and making sure they follow environmental regulations. Because all their properties are leased, they need to be mindful of previous owners. Let's talk money. As of June, the aggregate market value of their voting stock held by non-affiliates was around $412 million. The risk factor section is where companies lay out all the things that could go wrong. And there's a lot to unpack here for Global Industrial, and it's going to shape how we see their financials. First up, like everyone else, they're at the mercy of the economy. Things like inflation, interest rates, and overall spending habits affect their business. Global events are a worry too. Wars, cyber attacks, and even pandemics can throw a wrench in the works. They depend on getting products from suppliers on time. Delays can mean lost sales. Supply chains are still a headache. The pandemic made it tough to get products, especially from China. Tariffs and trade barriers can force them to raise prices or find new suppliers. Finding new suppliers isn't easy either. They have to vet them, manage the relationships, and make sure the quality is up to par. Shipping costs are always a concern. Higher fuel prices can eat into their profits. Even the weather can mess things up. Extreme events can disrupt supply chains and shipping. They need to make sure their warehouses can handle all the inventory and get orders out on time. They're looking to grow through acquisitions like the Indoff deal, but integrating those businesses can be tricky. The MRO industry is getting more competitive as companies merge. As an e-commerce business, they face risks from outages or technical problems. Cybersecurity is a major concern. A data breach could disrupt operations and hurt their reputation. And here's a big one. They've identified material weaknesses in their internal controls, especially around their IT systems. Let's dig into this a bit later. Pandemics can still cause problems like factory shutdowns and travel restrictions. So how are the sales? Well, consolidated net sales were up 3.3% or $1.32 billion. Excluding Indoff, though, sales actually declined slightly. So there's some weakness in their core business. Gross margin, or how much profit they make on each sale, actually improved a little at 34.3%. Excluding Indoff, that number is 36% better than the prior year. But selling, distribution, and administrative costs, or SD&A, are up. And that reflects key investments and marketing efforts and the full-year inclusion of Indoff costs. Operating income decreased 16.6% to $80.5 million. What about their cash flow? Their liquidity, or how much cash they have on hand, seems solid. They've got cash plus a credit line to cover their needs for at least the next year. There was close to $125 million in their credit facility. Now let's talk about something called goodwill. Goodwill and intangible assets are how you can take the acquisition of Indoff, for example. Goodwill and intangible assets totaled approximately $65.7 million. If those assets are determined to be impaired, they are required to record a significant charge to earnings in the period during which the impairment is discovered. Now let's turn to their cybersecurity efforts. They have a cybersecurity team monitoring and remediating cyber risks and incidents through triage and remediation protocols. They are using best practices from NIST to protect the company. The CIO reports quarterly to their audit committee and board of directors on cybersecurity threats. All of these are great steps to show they're taking it seriously. But remember those material weaknesses in internal controls I mentioned earlier? This is a big deal. They've identified problems with their IT systems, which could affect their ability to produce accurate financial statements. They're working to fix it, but it's something to keep an eye on. And it's not just me saying this. Ernst & Young, their independent auditor, also found these material weaknesses and issued an adverse opinion on their internal control over financial reporting. That is not a great thing to have on your record. One last quick item. During the last 3 months of 2024, no officer nor director adopted a Rule 10b5-1 trading plan. It just means they did not have a prearranged plan to buy or sell company stock. So what's the overall picture here? Global Industrial is dealing with a mixed bag of results. Sales growth is slowing and expenses are rising, but management is proactively making changes to boost the customer experience. A big problem is that internal controls are rated as being ineffective. They have major opportunities from brand recognition to a huge catalog of products and scale. Those IT weaknesses are a major concern and something needs to be seriously improved upon. Overall, I'm cautiously optimistic about Global Industrial. If they can get their internal controls in order and navigate the economic headwinds, they have the potential to do well. But it's going to be a bumpy ride, and as always, this is just a glimpse into the report. To give you a summary in easy-to-understand format, make sure to read the report and make your own assessment. Thanks for watching. If you enjoyed, please subscribe, like, and comment.